Hi, everybody. Welcome back to Markonomics 101. We're presenting Hoot Loot, our bi-weekly analysis of the market. And today's edition is going to be called Market Psychology. Why? Because emotions are a trader's worst enemy, which is why I'm sitting here on the deck of the Enterprise, even though I should have a better bridge chair than this plastic stupid chair. You think in the 24th century they could do better, but they can't. Scotty, can you get us going here, please? Captain, I can't give you a word of five, but I can give you a wee bit of scotch. I don't believe this. All right. Well, anyway, look, Dr. McCoy would be a terrible trader because of his little bouts of emotions. Like when he gets pissed off at Spock. Spock, you're blasted logic. See, and that's why we have to go back to kind of talk about logic and why those emotions matter. So let's go to the charts, and this will all make sense in a minute, even if none of it does to you right now. But remember, be informed, not misled. This is the place to come for the information that's real, not the BS you see on TV and reading the papers, okay? And here we go. All right. Now we're going to talk about market psychology because it's really important. What you're looking at here is not a typical chart, but it's actually, when we talk about market psychology, we refer to something called sentiment. Sentiment is really how bullish people are or how bearish they are. Now that's important because it's like if you have a bunch of people standing on a rowboat and they're all standing on the left side of the rowboat and it's starting to tip over, that's what the market is. It reacts the other way. So when you have too many people that are bullish and are tipping the rowboat one way, the market is prone to go the other way. These charts show you this, and you're looking at the American Association of Institutional Investors. This is like a survey of investors, and what you see in the very right here is that the amount of bulls, the number of people who are bullish on the market and positive, has just jumped. And right now, you really want people to be still scared and skittish because then you have new people to come in. Once everybody's bought in, there's no one left to buy in. So this is from Edward Yardeni, who does a great research report, although you can get the AAII survey just by signing up for it. I find that it's a very interesting thing. It's not a good timing mechanism because markets and investors can stay bullish for a long, long time. But once they're overly bullish, they're susceptible to something going wrong. And that's kind of what's happening today. This is called the investor's intelligence. This is newsletter writers out there. And right now, we're seeing 3-to-1 bullish to bearish, which means newsletter writers are all saying, okay, everything's wonderful. Well, when the market was at its bottom, they were saying there were actually more bears than bulls. And so, they're really good at being scared at the bottoms and being overconfident at the tops, which is really easy to do. But that's the reason emotions need to be kept in check. And you can't listen to other people too much, because if you do, you're going to be swayed. And I'm telling you this, Mr. Market does one thing really well. He gets you really confident at a market top, gets you to buy in, and gets you panicked to death at a market bottom. So those are the kind of things that you have to keep in check. And that's why market psychology is so important. Right now, we have too many bulls in the marketplace, and the market is now primed, it's got one of the conditions almost necessary to be there. This is a market traded index called the VIX, or the volatility index. I've talked about it on several occasions. The volatility index is a measure of how much daily deviation occurs in the averages. So the higher the number, the more the deviation. For example, back here you see a peak in March, okay, when we bottomed. One of the reasons that we believe the market was bottoming is because you had a volatility of 85. 85 has only happened twice in the last 20 years. It marked the 2009 bottom, and it also marked last March's bottom almost right to the day. So the lower that volatility goes, the more complacent investors are, and that's a better setup for market decline. Now, as you see here, we're still actually somewhat elevated. So the market still has a little bit of stuff to work out, and you'll see the charts in a minute. There's a lot of green on here today, I got to tell you. Okay, Dow Jones Industrials. We were thinking that this thing had peaked. Apparently not. It's bullish. It looks really good. It's broken out above, flag formation, made a new high. So, the thing that we didn't like about it is making lower highs. Well, no more. This is the NASDAQ 100. Now, what we talked about last time is still going on today. It's called rotation. Now, rotation is when certain things go in favor, certain things go out of favor. Okay, like, for example, me, I never go out of favor. So, talking about rotation doesn't really matter. But this, the NASDAQ, technology companies can go in and out of favor. And right now, even though this is a bullish pattern, what you're going to see is that they're starting to lose some of their steam and other sectors are picking it up. That's the whole key here, is that what sectors are picking it up are commodities. And we're going to show you a bunch of commodities. And again, this trend from away from paper assets to commodity assets is continuing. It's one of the big themes coming up. People are not even noticing this quite yet, but it's time to get ready for it and to make some money from it, actually. All right, now we've got the small cap index, Standard & Poor's 600. Again, pattern looks incredibly good. I mean, when you have sort of a worldview, and I have, and I know a lot of people have, that we kind of don't understand what the valuations are here, why they've gotten so high. But you can't really question that. You've got to you got to deal with reality. And the market is going up. That's all there is to it. You can't question it or you get run over. So now this is the Standard & Poor's, again, broken out from what appears to be a bullish pattern. We thought this could be in a head and shoulders. It's not. All right. The transportation index, formerly known as the rails, we want to be very politically correct, so we call it the Transgender American Index so that nobody gets offended. This one is broken out to new tops. Now, what's really weird about this one is that this thing is partly airlines, largely airlines, and they're all going up. So energy prices are going up. That's not good. Nobody's going on business travel anymore. Even Bill Gates, number 666 himself, says that airline travel is going to go down, business travel, by 50% over the next 5 years. Well, so why are these companies going up with higher interest rates and higher gas prices and lower capacities? I'm not quite sure I understand, but that's what's happening, and we just have to accept it as reality. Now, these companies I featured before because they are the big tech, important NASDAQ companies. They are not pulling the sled anymore, okay? Apple is in a bullish pattern, but it's not really leading anymore. And what we're seeing now is even Amazon still looks like it might be in a head and shoulders or rounded top. I could easily see this thing breaking down. This one doesn't look like it has anywhere really higher to go. So you've got, one kind of okay, one kind of negative. Facebook, pretty much okay, but this one is sort of like I give it a little bit of a plus. I just don't know. But these companies that have been pulling everything, Google's still looking pretty good, but so, we have mostly, but here we go. Microsoft doesn't look good. So there's 3 of them that don't look all that good, 3 that look kind of good. So, all of a sudden the horsemen that are pulling the sled are kind of falling by the wayside. Doesn't mean the market's going to go down, but it sure is harder to go up when, your big cap companies are not doing their job, just to always go up no matter what. This is Tesla. I've been negative on this thing for I don't know how long and wrong. But I'll tell you this, I still wouldn't buy the stock. It's still tremendously, I think, overvalued, and this thing is impossible to figure out, but it's bullish. It got added to the S&P 500 today, so all the big institutions now have to buy it. So there you go. Tesla now part of the S&P 500. I don't know how they do it, considering all the CFOs keep quitting and they don't have any financial statements that anybody can rely on, but I'm not on that committee, so I can ask. Now, something that is going on also is oil, and we talked about this beginning a couple weeks ago. This is the XOI, or the multinational. You've seen it, a bullish descending wedge, broke out. These are huge market cap companies. I mean, once oil starts to move up, you've got possibly 30% of the market cap of the market going up. So all of a sudden, technology is not all that important anymore. You've got something to replace it. Here's an example of a company that's in there, Chevron. Look at that move on Chevron at the very end. I mean, to actually have a stock this big move that much in a couple of days and twice, on big volume, that takes a hell of a lot of money. I mean, that's conviction. And that's why, I'm putting green here, because basically there's a lot of things pushing up, not that many pushing down. Here's another one. These are oil field drillers, the OSX index. These are basically the guys that, drill holes for, new oil and stuff like that. This one has been getting absolutely hammered. Look at that. All of a sudden starting to break out. Here's one called Baker Hughes. This is one of the biggest companies. Look at that thing, just absolutely just zooming. Now the bank index too. Now this one is another one that is just a little bit baffling right now, but we're just going to go with reality. Okay, this is the BKX or the bank index. Now what you'll notice here is that the red line that I drew was really what I thought the triangle was earlier, and I thought it broke down, but in reality, the green triangle ended up being the definitive pattern. So that's one of the things that you have to understand about any kind of charting is that things are fluid. You have to stay fluid, and you have to understand that when you interpret a chart a certain way, there might be more than one way to interpret it. Information may change. You have to stay flexible all the time. You cannot get stuck on a certain point of view ever. So broker dealer index, same thing. I mean, this thing is just looks like it's to the moon, Alice, to the moon. I mean, you look at this thing, all of us for a while there looked like it was breaking down. Goldman Sachs did, a few others, and no, it's zooming. American Express, I mean, again, huge moves, and you just have to, pay attention to them. Would I buy these things here right now? I'm not sure I would. Despite the fact that the chart says maybe take a look at them, they may not be a bad value here. They need a little bit of looking at, but I'll tell you, that just still surprises me. I still don't quite understand what that move's all about, except I think it has something to do with stagflation and the inflation and the commodity cycle. And the fact that, honestly, I think the economy is actually roaring ahead in certain respects. And in certain respects, it's not. And there's a bunch of money out there, basically propelling it higher and making it look like it's a lot better than it is. So this is Berkshire Hathaway. Again, I drew the pattern wrong. This thing all of a sudden is just exploding. Warren Buffett, you just made another $10 billion. Congratulations. Okay, this is Goldman Sachs. We talked about it. It looked like it was going to break down here at the bottom, and it broke up. Again, JP Morgan, same thing. It just all of a sudden reversed and went up. Pay attention to it. Take your licks if you're betting against it. Take your licks and just admit it. Move on as soon as you can. That's the best thing you can do. Don't beat yourself up over it. Don't let your emotions get to you. Don't panic. Just do the right thing at the right moment, and you'll be fine. This right here is probably the key to everything. It's the U.S. dollar. This is among the few red lines you're going to see on this thing, but the US dollar looks really bad. And because everything is priced in US dollars, every time the US dollar goes down, it really does not make anyone any better off. It actually makes everybody here worse off because all our assets are denominated in dollars, and it goes down, it buys fewer things. The dollar going down is inflation. By definition, they are synonymous. So when we talk about inflation, we talk about the dollar depreciating in value. Right now, it might make a brand new low. I don't think this looks very good, and especially when you have so much stimulus out there, you have such a big, huge deficit, more stimulus being talked about. And the waste that's coming along with it is really something else too. I mean, I don't think I could waste that much money, if you paid me to waste it. Or you had to pay me an awful lot to waste it because I don't know that I could do that. But anyway, we're going to go on. Alcoa, aluminum producer, again, commodity company, beautiful uptrend. This is copper. This is the the copper ETF making new highs. This is what tells me the economy's cooking along. They're making houses. Now, who are they making houses for? That's a good question because no one seems to have the money to buy a house. So how the hell are housing starts at new highs and driving up the price of copper? What are they building, quarantine houses or what? I don't know. But copper's going up. And this is Freeport Copper, McMoran, another fantastic looking uptrend. I mean, this thing could go a lot higher. This is really leveraged to copper. Good looking company. This one's an interesting one. This is called Grayscale Bitcoin Trust. It's not Bitcoin, but it's a trust that holds Bitcoin, kind of like an ETF. Now, the reason I put this in here is because it's almost like a stock version of Bitcoin. It's run by the Winklevoss brothers, the Winklevi, the guys that took on Mark Zuckerberg, for Facebook. Well, they may get the last laugh because they own a ton of Bitcoin. I can tell you that. And this thing looks really good. And it's also another thing which says to me the dollar is in trouble. It is going up because people are this thing is seen as a substitute to the dollar. It does not print. The dollar prints. This does not. Gold does not print either. So so here we've got oil. This one probably going to break up. I mean, I don't know that for sure, but based on the way the stocks are acting, I can't imagine that the price of oil is not going to start going up too. So, and then here's gold. It's holding a nice pattern. I'm a little frustrated with how long it's taking gold to actually break out here. But the longer the pattern, the better. And when it does break out, it looks like it's going to break out a long way. So, and this is silver, same kind of thing. Pattern looks pretty good. I think the companies that are there look pretty good too. And I would, these are the miners, and the miners still look pretty good. They're holding up there, and it's just a matter of time, I think, before they break out. So, I hope you've liked today's broadcast. We're going to come back on Saturday and do our weekly. There's some great opportunities that are coming up. Don't forget to like and subscribe us. We love you. Send us an email. Give us a call. We're lonely. We want to hear from you. And we'll see you next weekend.